have a lot of order blocks, usually in a bullish trend, but we have what we refer to as high odds order blocks, also known as, or you can say, no, if I say high odds, it will look like we are betting over here. No, this is not betting. It's not gambling. So let's remove the high odds. Let's make it probability, high probability. When some people hear odds, they think of betting. High probability order blocks. Now, when we say an order block is a high probability order block, what does it mean? We have to know what it means. So when we see them, we know what is likely to happen. When we say an order block is a high odd order block or high probability order block, it means that when the market trades into that order block, it is very, very likely to reverse from there, or it is very, very likely to respect that order block. Let me take it. A high probability order block is an order block that price is very, very likely to respect. When I say price is likely to respect, it means that, let's assume that this is the order block, okay, somewhere here, and the market is coming from this side. It's bullish, coming from this side like this. It's headed towards the order block, okay? Then it trades into the order block like this. Now, what it means is that when the market trades into the order block, or maybe not into the order block, but just below it, touching the below of it, or touching the bottom part of it, or even trading into it, what a high probability order block means is that price is very, very likely, about 70 to 80% likely to respect that order block. Now, when we say price has respected an order block, what does it mean? It means that price was not able to trade above the order block like this. Or should I say it wasn't able to trade beyond the order block like this, but it's rather got rejected either within the order block or at the bottom of the order block, and then it started to move down. This is a bearish order block, okay? So there are a lot of order blocks, but not all order blocks are high probability order blocks. So you want to train your eyes in such a way that you can identify these high probability order blocks, because once the market goes towards that order block, that trade is likely to play out, very, very likely to play out. So you must take note of that. Now, these high probability order blocks have certain characteristics. Now, as you already know, we have bullish order blocks and bearish order blocks. So let's look at the characteristics of a high probability bullish order block. Let's start with a bearish order block first. I'll do an illustration and then I'll explain. Now, but before I even do the illustration, let me mention one of the ways by which we can, or the major way by which we can identify a high probability bearish order block is that there are usually stops just under the bearish order block. Stops. And I believe you know what stops are. When I say stops, I'm referring to equal highs, double tops. That's what I mean by stops. Or old highs, equal highs, double tops. That is what I'm referring to as stops. Okay? So how does it usually look like? Let me do an illustration. Then we'll go to the main chart to look for example. Let's say this is price doing S10 like this. Then the market comes down and decides to go back up. Now, it's going back up. Observe something. Initially, the market was bullish here. This was a bullish run. Okay, that was a bullish run. A bullish run, a move upwards like this. We can see an impulse swing to the upside. Then there was a reversal here. We saw the market begin to reverse somewhere here, and then it started coming down. Okay, now this was a point of reversal. Now we have realized that the market is trading back upwards towards where it previously reversed from. That is this zone. But then right above, so this is a double top formation. And I've told you severally that double tops are not places where you should be taking trades. You should not be selling at double tops, because the institutions know that many retail traders are selling at these double tops. And if retail traders are selling at these double tops, they have their stop losses just above those double tops. And for most traders, the range is 10 to 70 pips. Just few traders can hold trades over 100 pips and loss. Most traders can't. So most traders have a stop loss of about 10 to 70 pips maximum. And they know that range. Okay. So This, according to the knowledge out there, is a good sell setup, the double top formation, and it's true. It is supposed to sell from there, but because they know that a lot of people are selling there and have their stop losses above, they usually run the market above those highs to clear everybody that was selling there and set their stop loss above, to clear them before they drop down. Now, once you see a double top formation like this and you see the market trading upwards towards that direction, then you look above that double top, this one, and then you see a bearish order block there. Let's say this is the bearish order block. This rectangle is the bearish order block. Okay, that is the bearish order block. Let us extend it to the right. So the market is what? Moving up towards that bearish order block. Now, when it gets here,